Exchange at 25 Broad, sponsor of this webcast, invites you to visit our remastered model residences.
Good day, I'm Abby Overton, and this is The Real Deal. At the top of the news, developers of the Domino Sugar refineries released details about their massive Williamsburg project. The U.S. stock market was volatile following grim housing news, and the Bronx gets $1 billion in development funding this year to date. That and more on The Real Deal webcast this week. But first, some highlights from this week's interview. Last week, real estate appraisal and consulting firm Miller Samuel released their second quarter results for residential sales in Queens and Long Island. Real Deal reporter Jen Benepe spoke to the company's president and CEO, Jonathan Miller, about his findings.
How is Queens doing in relation to the Manhattan market?
Queens is probably in third position. Long Island is far weaker in terms of when you look at Nassau and Suffolk County. Manhattan by far is outperforming all the boroughs.
What can we expect going forward in the second half of 2007?
I think we're going to see either flat or continued incremental slippage in prices.
So there's no fallout activity?
I don't think so.
For the full interview, click on the link below. And now for the news. A representative from one of the two Domino Sugar refineries developers released details about the massive Williamsburg project on Tuesday. The Community Preservation Corporation and Isaac Catan intend to build, and buyer Blinder Bell will design the 2,200 residential units on the 11.2-acre waterfront site. Dubbed New Domino, the mixed-use development is expected to cost about $1.25 billion and is expected to break ground by first quarter 2009 at the latest. The Dow Jones Industrial Average showed significant volatility and then sank more than 400 points last Thursday. The dip was largely attributed to news about continued weakness in the U.S. housing market. The U.S. Commerce Department reported that sales of new homes were down 6.6% in June, and major home builders D.R. Horton and Beazer Homes posted steep second quarter losses. Money for new development continues to pour into the Bronx. A recently released report indicates a flow of almost $1 billion in new investments to the borough this year alone. The Office of Bronx Borough President Adolfo Carrion stated that the borough also experienced a development inflow of $453 million just last month. 506 new addresses were issued so far in 2007. An 11-story office building at 10 to 14 West 57th Street is on the market and could sell for up to $200 million. The 84,000 square foot building could be redeveloped to 113,000 square feet with no height restriction. The property used to house Henri Bendel, but now Sharper Image and Mackenzie Childs occupy its retail spaces. Hotel builder Tishman Realty and Construction recently closed on 5 properties west of Times Square for $128 million, according to public records. They could be planning to construct a hotel on the 44th Street parcels. The properties, sold by the Witkoff Group and Harwood Properties, total around 146,000 square feet. Tishman Speyer is looking to lease 220,000 square feet at 30 Rockefeller Plaza, where asking rents go between $130 and $150 a square foot. The company is leasing floors 22 through 27 at 30 Rock, following its recent $220 million purchase of several floors in the skyscraper from NBC. A tenant would pay in the neighborhood of $30 million a year for the entire space. The City Council passed a bill last week requiring small builders to disclose detailed information about their corporate owners, prove their financial solvency, and take out at least $1 million in liability insurance for every job. Contractors who shirk the requirements will face suspension and fines of between $5,000 and $10,000. This legislation will end the Wild Wild West days where anyone can hang out a shingle, call himself a general contractor, and build new homes to sell to the public without any registration, said Councilman James Otto, the bill's chief sponsor. As Veen & Malkin follow through with a $400 million plan to modernize the Empire State Building, 3 companies have signed leases for large chunks of office space there. PR firm Taylor Global took close to 25,000 square feet, Lufthansa about 5,500 square feet, and existing tenant Block Holding Corp around 12,000 square feet. The lease rates were not disclosed, but last spring, Veen & Malkin said prices were in the $40 to $60 a square foot range. The city is expected to collect $1.7 billion in property transfer taxes this year, or $350 million more than it brought in last year. Some politicians are calling for the Bloomberg administration to cut the tax rate, which was raised in 2002 in order to bring in more revenue for the city. These taxes are definitely a hindrance when it comes to buying and selling property, said City Councilman Peter Vallone Jr. Thank you for joining us for this edition of the Real Deals webcast. Remember to click the link below for this week's interview. Please join us August 20th when Grammy-winning artist Moby takes the Real Deal on a tour of his two unique properties in New York. One is the Dome atop the El Dorado Tower, and the other is the Eric Clapton Chapel. In the meantime, please join us every week for the latest real estate news. I'm Abby Overton, and this is The Real Deal.